I, on behalf of our entire team, want to say thank you, Daniel Frumkin, Mr. Daniel Frumkin, that you find time for us. It's really a pleasure to have you here today with us. And our today's seminar will be moderated by me. My name is Vasily Tokarev, Mikita Poltorak, Jan Bujok, Tomasz Konrad, and Dominik Sekera. To begin with, Daniel, could you please tell us some basic information about you, where you're from, how old are you?
Sure. So I am Daniel Frumkin. I'm from Albuquerque, New Mexico in the United States. I moved to Prague in the beginning of 2019. I was working online in the cryptocurrency industry already at that time, doing like freelance writing for the most part, like writing articles, white papers, that type of stuff. I published a book about blockchain technology. My background is in mechanical engineering, so I went more of a technical writing path so that I could leverage my background more. So anyway, I showed up to Prague beginning of 2019, just planning to stay for a couple of months. I commented on a Prague subreddit that somebody asked a question about cryptocurrencies there and like the scene in Prague. I commented, I just moved here like a week ago, but I'm really into crypto and like also looking to meet people in the space. Somebody from Braiins DM'd me after that comment because I said something that I'd been working in this space and doing writing and stuff. So I got a DM from somebody at Braiins. I actually still don't even know who it was originally. So it's just a Reddit pseudonym. But they had an open technical writing position. They asked me to come in for an interview. I did. I was like immediately really interested because Braiins is doing a lot of really cool stuff. They're completely Bitcoin focused, whereas just for financial reasons, I'd had to be working with a lot of altcoins prior to that. That's where more of the money was for marketing and technical writing. So yeah, I went in and I interviewed for this technical writing position, and it was a great fit for me. The projects that they wanted me to come in and help with were really exciting stuff. I got to learn a lot more about mining, which is the most interesting part of the industry to me, being a mechanical engineer. Like most of the industry is just entirely, software development, which is it's pretty far away from mechanical engineering. So it was good for me to get into mining and have that connection to what I studied in university. And then so I've been at Braiins ever since. That was in April 2019. So I'm going on 2 years now at Braiins. Over that time, I've transitioned from just the technical writer to now being the head of content. So I'm managing the social media accounts, creating blog articles, writing the website copy, doing background technical documentation for our different products. And then I guess I'll do a quick background on what we're doing at Braiins. So first of all, we run Slush Pool, which is the oldest Bitcoin mining pool in the world. It was founded in 2010 by Marek Platinis, and he's the creator of Trezor, or he's one of the co-founders of Satoshi Labs, which makes Trezor. So in 2013, when he was there had been a hack on the Slush Pool servers, and he lost 3,000 bitcoins in that hack, and that made him very keen to get into the long-term storage, cold storage space. So he wanted to transition to work on Trezor, and Pavel and Jan were sharing an office with him at the time in Prague, and they were doing their own stuff, and they basically decided, okay, we'll take over operating Slush Pool 100% so that Marek can move over to Satoshi Labs. And so Braiins has been running Slush Pool ever since 2013. Changed a lot since then. Like the mining industry in 2013 was a pretty small niche thing. There was GPUs in the very beginnings of ASIC hardware, but it was nothing like it is today. So they've led a big professionalization in that space. Jan's background is in embedded Linux devices. So like that's what ASIC miners are embedded devices. So in 2018, when Bitmain was the main hardware manufacturer and there's a lot of centralization concerns, there was a couple of sorry about that. Jan and Pavel decided to work on an open source firmware implementation for the Bitmain devices so that people don't have to actually trust to be above board after they've purchased their hardware. So at that time, Bitmain had about 80 to 90% market share on the ASIC hardware, and Braiins coming in with this open source firmware was a really important thing for mining decentralization. And that's been a common theme of what we do overall. Like currently, one of our other projects is Stratum V2, which is it's a redesign of the original mining protocol that allows pools and miners to communicate with each other. And one of the key components of Stratum V2 is that and miners to propose their own blocks to work on, meaning that the miners themselves can control which transactions get put in the block, as opposed to the way it works right now, is that only the mining pools can control what goes into the blocks. So those are a couple of the projects. We have more, but if they come up, I'll talk more about it. More than enough for the intro.
Yeah, thank you very much for that white answer. And yeah, I'm sorry for my mic quality. And in your life story on your website, you wrote that one past podcast about Bitcoin with Andreas Antonopoulos in 2016 changed your life. And after that, you started to be really interested in it. What exactly interested you so much about this podcast? Was it charisma and the high level of Andreas's public speaking, or maybe some new information about Bitcoin or maybe cryptocurrency in general?
Yeah, at that time I'd only heard of Bitcoin, but I didn't really know anything about it. I just dismissed it every time it had come up. So it was like a 2 or 3 hour podcast, and so that was the first time that I really learned anything about what Bitcoin was. And at the time, being in the U.S., like politics are such as there. This was like right before the election between Trump and Hillary, and I was just kind of sick of all the politics and stuff, and I was feeling that there's no like good path forward here. It's just getting more and more corrupt, and I wasn't basically I didn't feel much hope about the way things were going. And then when Andreas started explaining what Bitcoin was, and I just realized, like, okay, this is a chance to like really restructure the way we're doing things and separate state and it was just like love at first sight, I guess. So I was still in university at that time, and I just became obsessed immediately, and I started sitting in the backs of my classes instead of participating. I was trying to just learn about Bitcoin during my class, and then when I graduated, I realized that I was much more into it than like that I had been doing in my internships and in my courses. So that's what motivated me to like go pursue some career where I could work with Bitcoin, even as just a writer, as opposed to doing the engineering stuff, because it was just clear to me that I was much more passionate about it.
Thank you very much for answer. In year 2017, Daniel made the decision to move to China. And my question is, how did this idea come to your mind? What were the expectations, and what actually happened in real life?
So yeah, I had been to China one time before in 2014, which is actually because when I was in high school, my sister was friends with a Chinese exchange student, and her original hosts were not a good fit. So she ended up moving in with my family in 2000, I think it was 2011 and 2012. So I became really close with her during that time, and then my sister to go to China in 2014 to meet her family. And I decided to do it because why not? It seemed cool, and I had a great time there. So ever since that time, I'd been like wanting to go back. When I graduated, I basically decided I'm not going to do engineering, but I don't really know what I'm going to do. So I thought like, okay, I need to somehow add some skills to my because not that I didn't want to be an engineer, but I just wanted to have location independence. I wanted to be able to move around and work online. And I thought that would be pretty hard to do as a mechanical engineer. So I wanted to find some other way that I could move around. And so I moved to China with the intention of like learning Chinese so that I could, if I have the Chinese and English, then I would be employable for life. It would be really easy to find work no matter what I want to do just because of the languages. So that was the expectation. The reality was I showed up speaking very little Chinese. I learned Chinese very, very slowly. It's like I was not expecting it to be easy, but I was expecting like I'm going to be immersed. So it will. A few months in, I was still like not really making enough money to pay my bills if I were to move back to the States, and I wasn't learning Chinese fast enough that I was going to be able to work at a Chinese. So at that time, I just got on. I got on a freelancing site and just put like, I'm really interested in cryptocurrencies. Here's my background with engineering. Here's some. I had like put some writing samples up on Medium. I wouldn't have a, and then I just tried to get like freelance clients to write about cryptocurrencies. And so I started getting clients from other parts of the world besides China. And then once I was stable, I was able to leave China, and I moved back to the US for a bit.
Yeah, thank you very much. And also on your website, you wrote that in 2018 you lived in a few different cities. And I want to ask what cities and countries have you visited, and what are the advantages and the disadvantages of Prague compared to other cities?
Sure. So in 2017, I was living in Wuhan, actually. That's where my Chinese sister was from. So Wuhan is actually a really, really nice city. The advantage there is that I was spending about 2 to 3 more, but yeah, it was a good place to get started as a freelancer because my costs were so low. After that, I moved back to the States and I lived in Houston, Texas for a little while. I did not like Houston at all. I'm just gonna skip it. Then I moved to Boulder, Colorado, which is my favorite city in America. It's like surrounded by mountains, just lots of nice stuff to do, but it's very, very expensive. So I didn't want to live there for too long either. So at the end of, or autumn of 2018, I moved to Europe, and I had a friend from the States who was wanting to move to Prague when he graduated from university, which would be in January 2019 when he would move. So I told him I'm going to go move to Prague for 3 months when you move there. So my plan was to come in January 2019 and stay until April and then go somewhere else. So knowing that, I had to stay outside of the Shenzhen area when I first moved to Europe. So I in to Poland, and then I got out of Shenzhen and I went and lived in Croatia for 4 months while I waited for my roommate to come, my future roommate to come to Prague. And then at the end of January, I moved to Prague, and yeah, I actually planned to stay longer in Prague before I even got the job at Braiins. Just once I showed up, I really liked everything about it except for the weather. Like this was winter, and I'm used to, I live in a desert every day, even in the winter. So I wasn't a fan of the winters, but like my week in Prague, it snowed, and I just went out exploring and taking pictures, and I like fell in love with the city immediately. And then I found a nice neighborhood that I wanted to live in. I found the cost of living is really reasonable. I feel that there's a lot of good things to do, restaurants and bars and parks and stuff around the city. And then I started working at Braiins, and that just solidified it for me as the place that I wanted to be for a while, because I made friends at Braiins with like actual Czech people, which doing the digital nomad thing where you move around a lot. One of the downsides is that it's just really hard to get a social circle and feel comfortable in a new place. So when I started at Braiins and I made friends with locals right away, it was just like Prague was the first place that felt like home since I left my original home. So yeah, I love it. But actually, I don't know if it's obvious, but I'm not in Prague right now. I'm actually in Mexico, and that's because all the COVID stuff going on. I didn't want to stay there for the winter and everything and be quarantined inside. So I came to Mexico for a while, and I'll probably be back in Prague in the summer.
Yeah, I think it was a good decision because situation with the COVID in Prague, yeah, is very complicated. So my last question maybe will sound stupid and dumb for somebody, but I really want to hear answer from you. And my question is, what thing in Bitcoin or perhaps cryptocurrency in general do you like the most? What thing you will find most fascinating?
Most fascinating, it's for sure mining for me, but it's not the technical aspects of it that are the most interesting. It's the like global business aspects of it, the differences between how mining works in China, like how people interact in China versus how it works in Russia versus Kazakhstan or Georgia or Scandinavia, Iceland, the U.S. and Canada and South America. Like each of those different locations, there's mining going on. It has like different energy sources are common depending on the location. Like Iceland is 100% renewable energy, whereas like China right now, as people might know, they have a lot of the hash power is located in Xinjiang, which is predominantly coal-based. Um, there's a lot of different interests in so much of the like the strategy that different miners will have. A miner in China, for example, that has a good relationship with Bitmain or MicroBT or one of the other hardware manufacturers is more likely to get the initial shipments of new generation hardware, and the early on, but the more other people get that hardware, the more it puts pressure on your margins. So like seeing the evolution of the mining industry now, where there's so connection between the hardware manufacturers and miners in North America and in Europe than there used to be. Like there are actually mining companies in North America and Europe that are receiving the first shipments of new generation hardware, whereas up until maybe last year that was all Chinese. So seeing this evolution, it's very promising in terms of hash rate distribution. Like it seems that it's getting more and more geographically distributed. That's likely to trend in the opposite direction short term because the rainy season is starting in Sichuan, China, in a few weeks. And during the rainy season, there's abundant hydropower in that region because they overbuilt all the hydro dams in that region, and they produce like I think it's 200 or 300% more electricity than can even be consumed by the entire population of the area. So during this time, mining is very cheap in Sichuan. So it's likely that China will gain a lot of market share in the short term, mining there. And the right side on that is that it's 100% renewable energy and clean. So for the energy consumption, environmental impacts, floodsters can take a little break on that, because it's going to be more than probably 70 will be run. But yes, long-winded. Unsurprisingly, it's mining. If I had the chance to go work in some other aspect, at some other area of the Bitcoin industry, I wouldn't even really consider it at this point. Like, mining is just so much more interesting than anything else to me.
Sorry, thank you very much for your answers, and that's all from me. I'm passing the word to Jan Bojok.
Thank you. I would like to continue with our discussion and ask you about the very popular space called DeFi, which means decentralized finance. Can you tell us a little more about what is it and which benefits does it have opposed to the traditional finance?
Sure. So I'm certainly not an expert on DeFi, but the general idea is that with traditional finance, you have to trust third parties to do things, whatever it may be. If you want to take out a loan, you have to go to a bank and apply, and then they have the ability to reject you or to give you a terrible interest rate. If you want to, like, if you just want to transfer money somewhere, like do some complicated financial contract, you basically always have to trust a third party, and in a lot of cases you need to get lawyers involved depending on how complicated what you want to do is. And I think the general idea of DeFi is that you don't have to trust any third parties, to just the same as with Bitcoin. Like, you can do more complicated financial interactions with people and financial contracts without trusting anybody and without involving any lawyers. And then the more complex part of that is that if you're coding some contract for DeFi, it has to be very, very precise and specific, because there's no, like, it doesn't go to court to be interpreted by a jury or anything like that. If something goes wrong, like, you have to define clearly what happens in every different situation, because the code is just going to execute the way it's written. So if you don't see a particular edge case coming, and you don't have you don't have the code written specifically enough to resolve a certain situation, then you can run into problems. So I think DeFi is like this really interesting, innovative space that there's a lot of risk involved, especially right now, because there's so much potential room for error with these contracts. But at the same time, it's giving more accessibility to financial infrastructure to people, because you just need the mobile phone and access to cryptocurrency to use it. One other really quick thing. At Braiins, we don't do much with Ethereum or any other altcoins. Like, we're pretty Bitcoin focused. So one of the cool things is that we merge mine RSK, which is it's basically Ethereum ported onto a side chain that is then mined with the same hash power as Bitcoin. So we don't spend any, or our miners don't spend any extra energy mine this side chain. So what RSK is it's just basically a fork of the Ethereum code base put onto Bitcoin, which means that they can build some of the same stuff that's being built on Ethereum and other smart contract platforms onto Bitcoin. So we've been experimenting a little bit in the background with the DeFi on Bitcoin, which it's for now it's just there's a stablecoin protocol that's one-to-one pegged with the US dollar. So that basically means, like, you can trade Bitcoin for dollars without trusting anybody. And then they have a couple of other tokens that are for like a leverage position on Bitcoin. So you buy the token, the equivalent of owning 1.2 or 1.5% of that equivalent amount of Bitcoin. So those are very early. There's obviously way more advanced stuff being built on Ethereum that I don't follow too closely. But I am really excited about the like super long-term possibilities for DeFi on Bitcoin and potentially on other platforms.
Yeah, so my next question was about the risk of DeFi, but you already told us about that. And also, I wanted to know if you have any favorite projects in this space. But you said you only do Bitcoin, so I don't know if you have any or you just focus on Bitcoin.
Yeah, so professionally, it's 100% focused on Bitcoin. Personally, I try to keep up with the other stuff going on a little bit. I was working for a media site and then doing general marketing and technical writing for other projects. So I was much more up to date with stuff back then. One of the projects that I'm most excited about is there's a decentralized exchange called DCR Dex, which is built by the Decred team, which is decentralized exchanges are part of DeFi. Like that's what Uniswap and SushiSwap and PancakeSwap and all of those are basically decentralized exchanges. Those are super high volume, but the thing that's exciting to me about DCR Dex is just the management of it is connected to a DAO, which is the Decred treasury. And I think that like one of the key issues with any open source development is like how do you get funding for it long term, because there needs to be incentives for developers to work on it. Of the different DeFi projects, they funded themselves through like ICOs or airdrops, whatever, having tokens. And what I like about Decred is that the DEX has absolutely zero fees, and all of the development was funded from this treasury. So like it's more in line with the open source ethos and not having like pre-mines that are enriching the project creators before they've even built anything. I think that's another risk in the whole DeFi space and cryptocurrency industry in general, is that the fundraising mechanism is cool, that you don't need to go through traditional venture capital to raise money. But the downside, a lot of these projects raise huge amounts of money before they've actually built anything. And then it's 1 year, 2 years, 3 years later, and they're not really providing any value to the ecosystem. So I think that's like something somewhat concerning about DeFi, is that I see a lot of the projects feel very overvalued to me. But meanwhile, there are a lot of projects that are really interesting too.
Thank you for your answer. And another is connected to the DeFi and mining. Is it better for miners to sell mined Bitcoins or to use DeFi services and finance their cost with external financing from DeFi and save Bitcoin for later? Speculate on the price of Bitcoin? If yes, can you describe how miners most of the time use DeFi?
Yeah, so it depends a lot from, like, if you're a retail miner with a couple of machines, then you're generally, the only reason you're mining is because you want to stack sats. So those miners almost never sell their Bitcoin right away. Enterprise miners, like 1 to exahash, or even just a few hundred petahash, which is like 0.5 to 1% of the total network hash rate. A lot of those will have more sophisticated strategies. So they might be doing things like a certain portion of the Bitcoin they mined, they sell immediately to cover expenses and to have like a cash in case of like whatever, an opportunity to buy more hardware, just a device that they need to have a reserve in place so that they don't need to sell their Bitcoin after. But generally what we've been seeing is that more and more miners in the last year or two are mining to save their coins and doing exactly what you said. They're using DeFi solutions to cover costs. It's not like it's not extremely common yet, but it's something that a lot of mining for sure, whether it be mining the Bitcoin and then putting some of it into BlockFi so that they can earn an interest rate on it, or they might just use it as collateral to take out a loan so that they can cover their expenses without actually selling any of the coins, like you said. I think that we'll start for that to become common practice with miners, because for the most part right now it's like a simple I would miners will sell the portion of the coins that they need to cover their electricity bills and their other costs, hardware costs and stuff, and then after they do that
okay, Daniel, can I just
after they cover all their long term
can I interrupt you? We are your connection is not really good, and now it get a bit worse. So just wanted to know, are you able to somehow maybe reconnect or use data or something like that?
I'll try using data, but it might run out in the middle of the call because I'm not sure how much I have left on my SIM card. But I'll do that, and then if I run out, I'll reconnect with Wi-Fi later.
That's awesome. Thanks.
Okay. Is this any better?
Hopefully yes. Yeah, I think that you can.
Should I maybe try without the video too?
Yeah, now it's clear, crystal clear, the sound at least.
Okay, cool. Okay.
Yeah, now it's better. Okay, I don't know where we stopped. Sorry.
Yeah, so basically you told us about the DeFi and mining. So my last questions about DeFi, how do you think it will look like in the future?
I would guess that DeFi will have collectively a much smaller market cap than Bitcoin, just because so there's a paper in 2017 that was titled "An Institutional Investor's Take on Crypto Assets," and the general premise of the paper was that any token that is like primarily utility token, which is like Ethereum, for example, the main idea of the ETH currency when the project was created was that you use the ETH to pay for gas fees when you're using Ethereum. So like your incentive to hold ETH is that you can hold it and then use it to pay for like executing smart contracts or just transacting on the Ethereum blockchain. I've seen like that is starting to change now with like the Ethereum improvement proposal that changed it to a deflationary monetary policy. Like clearly, the intent has changed, or at least the narrative has changed towards being more focused on ETH becoming actual money, not just a utility token. I don't know how successful that's going to be, and personally, I'm not betting too confidently that it will be successful. I think that the smart contract platforms are probably not well designed to be just money in the way that Bitcoin is. So I think that the store of value market cap, like the addressable market for just a decentralized store of value, is far, far bigger than the addressable market for decentralized finance. But that being said, like the store value market is maybe tens of trillions of dollars or even $100 trillion or more. But that still leaves a lot of room for DeFi to be like hundreds of billions or multiple trillions in the future too. I think the big thing will be finding actual use cases that are outside of the like cryptocurrency trading as like the primary utility. What I see now is like basically most of the DeFi stuff is like cryptocurrency trading, like in a decentralized way with like Uniswap and those types of things. And then there's a lot of the decentralized lending, which is people wanting to earn interest and or like people wanting to take out loans with crypto as collateral. Those types of things I think are relatively niche and small. And I think they're probably good for working out user experience, like getting better and better at the user experience so that people who are not super into the cryptocurrency space and not interacting with this stuff on a daily basis will also be able to use it in the future. And maybe it's closer to that than I realized, but it feels to me like that's still quite a ways away, where there's going to be decentralized finance applications that are like really useful for just the typical person who doesn't care about crypto and who just like that will be the best solution for them that exists. I think once we reach the point where cryptocurrency solutions, DeFi solutions are the best things out there for particular applications, then the sky is the limit. Like it can grow into multi-trillion dollars. But for now, that's not what I'm really seeing. I'm seeing it much more as like a niche thing that like people who are into the space can participate with it, but the average person is still a long ways away from, I think, like participating on a regular basis.
All right, thank you for your answers, and my colleague will continue with another topic.
Okay, thank you very much. So basically my questions are going to be connected to the eco-friendliness and overall the sustainability of Bitcoin mining. And I would like to start basically one of the byproducts when you are mining is obviously the heat. So I'd like to ask you if do you believe it is possible to capture the heat from the mining rigs and reuse it in any other way? Or is something like that working already out there?
Yeah, we published an article on the Braiins blog about a few projects that are doing that right now, recapturing the heat. So I guess a quick like explainer why that's significant is that like the debate about Bitcoin's ecological impact is typically focused on its energy consumption, which doesn't actually say anything about its ecological impact, because like consuming hydropower is completely different in terms of its environmental impact compared to consuming coal or natural gas or what have you. So with the heat reuse application, what makes it interesting is that it enables basically like a low carbon footprint or even zero carbon footprint application for Bitcoin mining, because the energy is consumed and then it's converted into heat. And then if you can reuse that heat for something, then it's basically as if like the energy being consumed to mine Bitcoin has no environmental impact because you needed the heat anyway to do whatever this other application was. So the projects that are already doing this it's mostly like the greenhouse type applications. So they'll have a little mining pod set up somewhere that's consuming electricity, and then they have some heat exchange thing in between that's allowing the heat to transfer into a greenhouse or some other facility, and then the heat it's just as if it was produced by a natural gas heater or any other type of heater. So it's basically if it's done well, it's a way to decrease your electricity prices by consuming the same electricity that you otherwise would to heat something, but just in between, you're also using that electricity to mine Bitcoin, and then you're earning some revenue on it. So you basically deduct that revenue from what you're paying for the electricity. And even if you're not mining Bitcoin profitably on its own, like even if your cost for electricity would prevent you from mining Bitcoin originally, if you can use that heat for something afterwards, then it makes it more economical to consider doing it. So yeah, there's greenhouses in Sweden, I think, Sweden or Norway, or maybe both, that are being heated with Bitcoin mining ASICs. There's a couple of projects experimenting in North America. Like in Canada, there's a whiskey distillery that is getting the heat for their distillation process is coming from ASICs. There's also some place where they're like, it's a salt production facility that's getting their heat from ASICs. And then there's others. There's even like the Sacramento Kings NBA team. I think they did something to set up a small little mining operation in their arena, which they use to heat the arena at some points. Or it might have been something more specific than that. I'm not clear on the details, or don't remember them. But yeah, for right now, these are all like relatively small use cases. But the future that I envision, just because it could make economic sense to reuse the heat in every single application possible, because it's just a way to decrease your electricity prices at the end of the day. If you're a Bitcoin miner and you can repurpose that heat and make good use of it, then your margins are going to be improved. So with that economic incentive in place, I could see the future being like any moderate or large sized Bitcoin mine would be surrounded by something that can reuse that heat after the mining takes place.
Yeah, Daniel, we can't really hear, neither see you. We are sorry for the technical issues, guys.
Daniel wrote me that he's trying to reconnect with Wi-Fi because he ran out of data. So let's wait a while. Not yet. Okay, so I will send him a link again. Okay. Yeah.
Okay, cool. Sorry about that. Yeah, I just lost data on my phone.
Yeah, now we can hear you, so now it's fine, and see you as well, hopefully, or partially.
So did you lose me at the end of the mining heat repurposing part? I think I was done with that that answer.
Yeah, you basically answered it fully. Thank you very much for that.
Mm-hmm.
But my next question,
I'm sorry, could you please turn your camera a little bit to the right, if it's possible, so we can see you properly?
Yeah,
Yeah,
sorry.
thank you very much.
I can't even see my own picture here. Better?
Yeah, it's okay. It's okay.
Okay.
Okay, so basically my next question is, according to you, are we on the path to the green mining? Do you think that the proof of work is bad for the environment? Is there an eco-friendlier mechanism consensus?
There's certainly eco-friendlier ones. They just make trade-offs that I don't think are good trade-offs to make. Like proof of stake, for example, it's, in my opinion, it's not that much better than the current system where like you have the people with all the money are the people that are controlling the system. Like I don't think that there's really a like well democratized consensus system with proof of stake. I think it's just going to be the exchanges that have all the retail users are going to pull together all of their coins, and then they'll have an extremely large say in consensus, and then like large private institutional investors will have an extremely large say in consensus. And I think if you look back to like Bitcoin in 2017, when all of the exchanges, or at least most of the exchanges and most of the a lot of the big players at the time wanted to increase the block size. And the reason that it ended up not happening is because the nodes in the Bitcoin network still had a lot of power. So there's like the checks and balances in that proof of work system with the nodes in the Bitcoin network that I don't think really exists anymore when you have proof of stake. Like basically the stakers are all powerful in that system. So yeah, in terms of eco-friendliness, I think the trade-offs that proof of work makes are totally worth it. Like the system that we can create with Bitcoin, I think is valuable enough to the world to justify its energy consumption. And then I also think the narrative about Bitcoin destroying the environment is completely overblown and misunderstood by the majority of people, just because they like the fundamental factor in Bitcoin mining is electricity price, and like just simple supply and demand says that the cheapest electricity will always be that which has no demand or low demand from other sources. So what we see with a lot of Bitcoin miners already in North America in particular is that they're participating in these load balancing programs where they have a deal with an energy producer, or maybe they actually are the energy producer themselves, and they will send their if the grid has enough demand to consume all of their energy, then they send it all to the grid. And Bitcoin mining is not online at all in those particular times. And then the only times that they're mining Bitcoin with that energy is when there's not enough demand from the grid to buy it. So it's basically just a way for them to always be operating at close to full capacity on their energy production, which is the most efficient way to do it, particularly like if you have a generator that's using petroleum, for example. If you run it at near its peak capacity, then it's more efficient per unit of energy that it produces than if you're like constantly throttling it up and down a little bit. That creates a lot of inefficiency. So I think that the incentive to always find cheap or potentially free electricity means that there will not be very much energy energy consumption for Bitcoin mining, which would otherwise like have been energy that would have gone to a metropolitan grid to be consumed by regular people. Like there's not mining taking place in big cities, at least at any scale that's considered significant. There's no mining taking place in big cities where miners are competing with regular people for that energy. Like most of the mining that's taking place is in very remote locations where the economics of like storing and transporting the energy to a place where it could be consumed just don't work out well. For example, the natural gas curtailment in the US and Canada. There's natural gas is produced as a byproduct of oil extraction. But there's not a very good market for natural gas right now. Like basically, it's not economical for these oil producers to do anything with the natural gas. Like they can't go sell it to anybody because there's way too much of it, and so the price of it is too low. So what's been happening in the last 3 or 4 years is that Bitcoin miners are going and talking to these oil companies, and they're saying, well, right now what you're doing is you're flaring and venting that natural gas because you have to get rid of it. Like you can't just leave it there and building up pressure in the well. Like you have to get the natural gas out. So in order to get rid of it, because they can't sell it to anybody, they just have to flare it or vent it, which means basically they're burning it into the atmosphere. And natural gas is methane. So when they're doing that, under ideal conditions, like 100% ideal conditions, then they're going to release a lot of CO2 into the atmosphere. But under non-ideal conditions, which is like realistically most of the time, especially where these are taking place, like North Dakota, freezing winters with high winds and stuff, in those non-ideal conditions, it's not only releasing carbon dioxide into the atmosphere, it's also releasing methane into the atmosphere. And methane, according to the EPA, is like 25 times to 50 times worse for the environment per unit than carbon dioxide is over a 100-year time period. So like those types of applications, it's like Bitcoin miners are going to these oil producers out of their own economic self-interest because they can say, it's actually costing you money to get rid of this natural gas, and you have to pay taxes and fines because you're polluting a lot by flaring it. And all we propose is that you just give it to us. Like you can get rid of it for free. You don't have to worry about it. You don't have to do anything with it. Just give it to us, and we're going to take care of it. And then you don't have to pay the taxes on it. You don't have to pay the fines for venting and flaring it. And or even in some cases, they'll work more closely with the energy producers, the oil drillers and stuff, and they'll actually share the revenue from the Bitcoin mining to have more of like the cohesive partnership between each other. So that's like one really exciting application where people don't realize that in that type of application, Bitcoin mining actually can have a positive environmental impact. And it's a lot more common than people realize as well, because like you could power the entire Bitcoin network right now purely on waste gas from North America. Like there's enough gas getting vented and flared today that you could power almost the entire Bitcoin network, if not the entire network. The data is a little bit hard to narrow down precisely because like it's expected that a lot of these companies are intentionally like not providing completely accurate data on how much they're venting and flaring because it costs them a lot of money. But yeah, it's a huge amount of energy, and that's just one application. Then there's the other applications like I was talking about earlier in Sichuan. Like more than half of the Bitcoin network can be powered from hydropower in Sichuan, which would otherwise just be going completely to waste. Like there's nobody to consume that hydropower in Sichuan if Bitcoin miners aren't going in and consuming it. And the same with the miners that are in Iceland. There's probably like 1% or so of the Bitcoin network is in Iceland, and Iceland is 100% renewable energy. Like their entire economy, they don't have any fossil fuel energy production in Iceland, and there's a whole lot of excess energy being produced. and that's what the Bitcoin miners in Iceland are consuming. So like, I think there needs to be a lot of education about like these applications, and I think the majority of people are not like very open to hearing that Bitcoin mining is potentially not as bad for the environment as they would initially believe, because the way that it's being presented in the mainstream is just like, oh, Bitcoin is consuming as much energy as Colombia or Switzerland, some other small country. And that just sounds horrible. Like when you don't have any context on it, it sounds like the bigger Bitcoin gets, it's just going to consume all the energy in the world. And then like we're all screwed and everything's going to just be destroyed. And that's really not the case at all. It's like Bitcoin is predominantly consuming waste energy in remote locations where otherwise like can't make it to people. And then it's also just consuming a lot of renewable energy because the storage and transportation on renewable energy is not all that advanced and cheap yet. Like battery technology is not sufficient to store and transport most of the renewable energy that's being produced. So like with wind farms and solar farms in Texas, for example, a lot of that is happening in very rural locations, and then it's very difficult to transport it to the big cities in Texas. So that's another place that we've seen a lot of Bitcoin miners setting up around Texas just to work as a like load balancer for those wind, solar, and natural gas projects there. So yeah, in short, I'm like very excited about the actual ecological impacts of Bitcoin mining, because I think like although it is consuming a ton of energy, it's a huge amount of energy. I think the net impact in terms of greenhouse gas emissions is not nearly as large as people typically expect, because like if you just look at it as the amount of energy that Bitcoin is consuming, and then you like extrapolate from a typical energy grid, how much of that is coming from renewables and how much of that is coming from non-renewables, and then like that's how you make your carbon footprint estimate for Bitcoin mining, then it looks terrible. It really does look terrible in that situation. It's just that's not reality. Like reality is it's happening in very remote places, and it's heavily renewable driven.
Yep, thank you very much for that. And we are getting short on time, so I would like to ask you probably the last question, or second last question. If you know what is the ARK investment solar battery Bitcoin thesis, so if you're familiar with it, and if you are, can you describe what it basically stands for and tell us your opinion on it, or do you think that the mines should somehow integrate it into the normal operations?
That's the white paper that Square and ARK published last week.
Yes, exactly that.
Yep. So I was working on an article to follow up on that and like try to make it simpler for people who aren't like as familiar with Bitcoin mining. And I haven't finished the article yet because they have a pretty complicated model that I'm still working on figuring out exactly how they modeled everything. The initial general concern is that if you have solar energy in particular, it's like very intermittent. It's maybe 6-7 hours a day of strong energy production, and then the rest of the time there's no energy production. And then potentially wherever the location is, you might get like really, really minimal energy production during the winter if it's not as sunny. So the general idea of their projects or the white paper is that if you integrate Bitcoin mining, batteries, and solar energy and wind energy all together, you can actually improve the economics of the energy production and make it much more scalable. And the reason is that during those times when the sun is shining brightly with solar, or the wind is blowing heavily with wind, you're producing much more energy than you actually need to power the grid fully at those times. And that means that like there's economic value there, and it's very hard to capture that value because of the limitations with storage and transportation that I was talking about before. So the idea is that if you use all of that surplus that's being produced when the grid's demand is being met completely. If you use all of that to mine Bitcoin, then you make the economics of building out and running that solar plant or that wind plant significantly better, because you're producing a ton of revenue from all of the energy that you would otherwise be unable to do anything with. So it's the same as like the natural gas use case as well. It's just like, here's currently a huge economic inefficiency that can be turned into at least something where the margin is a lot better. The big concern with solar and winds in particular is that because it's so intermittent, it means that the hardware would be idle for a lot of the time, and the hardware itself is very costly. So the question is, if you buy the hardware up front before, like, to set up the mining facility, how much value can you extract from mining in the time that hardware is viable before the hardware becomes like obsolete or too inefficient to continue mining with it? And will you be able to extract enough value to actually pay for the hardware up front? So supposing the hardware costs $10 million, and then if you're a regular miner, you're mining with it 24/7, 365. So you're going to break even on that hardware investment much earlier than the case of the solar plant or the wind farm or whatever, because they're only mining maybe 10 hours out of the day instead of 24. So their break-even time is going to be twice as long or even more. And then on top of that, the network difficulty is going to keep going up and up and up over time, assuming that price doesn't completely crash. So the longer you have that hardware and you haven't paid it off, the smaller your margins are getting day by day in order to keep earning profit that you can pay off that hardware investment. So that's what I want to do with my article, is like a much more simple economic analysis of like what situation would it make sense to make that initial hardware investment. And then one really interesting thing about it is that there's a lot of options in terms of which hardware they might get. So in the case of energy curtailment, like this would be, it would make a lot more sense, in my opinion, to get the older generation hardware, because it's less efficient, but it also costs much less upfront. So you could get maybe 3,000 Antminer S9s, which are going to consume 80 something watts per terahash of hash rate. And you could mine with them, and that's only going to cost you maybe like $20,000 or $100,000. It could vary a lot depending on hardware prices and supply and stuff. But if you were to go with the newest hardware like Antminer S19 or WhatsMiner M30S or something like that, the initial hardware purchase is going to cost like millions and millions of dollars more, which just all of that is it's like much higher risk. So in the event that we see this take off, I would expect it to be like when hardware is reaching the end of its lifespan, that's where the energy curtailment applications will go seek out that cheapest hardware possible, so that they don't have to take a whole lot of risk in order to incorporate mining into their energy production operation.
Mm-hmm. Yeah, thank you very much for that. And the last question, really quickly, do you think it is possible to create a decentralized algorithmic coin that would be indexed to the price of electricity? Or can you send other options how to use electricity as a relatively stable, neutral, and global currency in the future?
Can you say that again?
Yes, of course. So do you think it is possible to create a decentralized algorithmic coin that would be indexed to the price of electricity? Or can you see any other option how to use electricity as a relatively stable, neutral, and the global currency in the future?
Huh. I never thought about that. I suppose it would be possible, but I kind of feel like over enough time, Bitcoin will kind of do that on its own, just from energy arbitrage. Like, I think if there's very cheap energy somewhere, Bitcoin miners will go and find it, and then whenever that happens, like, it's changing the supply and demand curves for all of that stranded energy. And I think if there's always a Bitcoin miner to consume energy that would otherwise go to waste, then it's going to bring the the value of that energy up closer to the value of energy that would be going towards a grid. So I think that that would eventually like create a little bit more balance in energy prices in terms of like geographically distributed. But like to a small extent, but there will always be like probably a lot of imbalance just because like the geographic features of any region are so different. Like you can't do the same thing in Mexico that you can do in Iceland just because it's like totally different resources and stuff. So, but yeah, I think Bitcoin will do some amounts of energy arbitrage and balance out prices a lot.
Yes, thank you very much for that. And let me pass the virtual microphone on to Dominic.
Thank you. I would like to ask you when and why the miners sell their Bitcoin and how can we take advantage of it? And does portfolio management take part in decision making for them?
When and why Bitcoin miners sell. So it depends on the particular miner strategy. The first reason that they sell, which is universal, is to pay for their electricity costs and pay hardware costs, or like if they had a loan to buy the hardware, or they have investors that help them purchase the hardware, then they probably have a monthly schedule that they need to be making payments on that investment. And then they also have the monthly payments for all the electricity that they're consuming and maybe labor and other costs, security and that type of stuff. So that tends to be a more steady source of selling. And then like we mentioned before, there are miners now looking into like DeFi solutions and other solutions to not have to sell their BTC. Even in those cases, they can just hold the BTC, use it as collateral, and then pay with fiat and keep all of their coins, or at least a larger amount. But there's also some amount of miners that are like in addition to mining, they're trading, or like maybe trading is the wrong word, but they're trying to time the market a little bit more than just like hold all the way through. So for example, if you're a publicly traded company and you have a lot of Bitcoin on your balance sheet and Bitcoin price just went up 100% in 2 or 3 months, then you might have a fiduciary responsibility to sell some of that Bitcoin and like realize a little bit of the profits and bring down your risk. So like on the large scale, a big reason to sell would just be that like if you make such significant profits on holding for a certain amount of time, then it's just going to make sense to like decrease your risk. But I would expect that to be more of like a portfolio balance strategy than a like miners aren't typically going to sell all of their Bitcoin at once. Like they might sell to maintain, for example, like an 80% Bitcoin, 20% cash balance. So if the price of Bitcoin goes up, that means that they'll sell some of their Bitcoin to get back to that 80%, 20% balance. And if the price goes down, then that means maybe they'll be spending from their cash reserves to cover their costs, and they'll be keeping all the Bitcoin they're mining until they get back to the 80-20 balance in like fiat terms.
Okay, thank you. What happened last week when mining difficulty declined by 30% globally in one day? What do you think? Is it dangerous for the ecosystem?
So what happened is that there was a coal plant in Xinjiang, China, that they had some accident, and like they weren't following proper safety precautions or whatever, and there was a big accident. Some people got hurt, and the Chinese government went in to Xinjiang and said, like, we need to do inspections on all of these coal plants and make sure that they're all following the safety standards and stuff. So in the meantime, all of the Bitcoin miners that were located in Xinjiang had to shut down, and that's why we saw a huge drop in hash rate. A couple of interesting things though from that is that the initial drop in hash rate looked like it was maybe 30 or 40%.
And that's because there was, well, what we learned now is that there was just a short-term variance in the block times on that first and second day that made it look like 30 to 40% had fallen off the network, when in reality it was something closer to like 20 to 30% that had fallen off. So what that tells us is that actually China's share of hash rate has dropped significantly, because right now there's not a lot of hash rate in Sichuan, because it's not the rainy season where they have the hydropower. And at the same time, the local government in Inner Mongolia had banned Bitcoin mining, or they had at least like told Bitcoin miners they need to get out soon, more than a month ago. So that leaves like Inner Mongolia and Xinjiang are historically the two places where the most mining occurs in China during the winter, before the Sichuan rainy season. And so there's no mining going on now in Inner Mongolia, which means that almost all of the Chinese hash rate is located in Xinjiang, and it almost all went offline. And then we discovered that it was only maybe 20 to 30% of the entire network. So what that tells me is that like the Chinese share of hash rate has actually dropped pretty significantly in the past 1 to 2 years, because before we were thinking it's something like 60% maybe of total network hash rate is in China. And now it looks like, I mean, there's still mining going on in other regions for sure, besides Xinjiang. And then there's probably some mining in Xinjiang that's not coal powered, because the renewable share there is actually like 30%. So there might have been some mining going on in Xinjiang with renewable energy as well that wouldn't have been impacted. But overall, it seems like maybe the Chinese share of hash rate is below 50% now, which would be the lowest that it's been since the ASIC era began, basically like 2013, 14. So that's actually a really promising trend. And then the the other thing that it showed us is that like what happened is transaction fees started going up because the block times were too small or too large to include a lot of transactions on a time basis. So as the mempool got more and more full, the transaction fees started going up more and more, and then that incentivized miners to get machines online as quickly as possible, to maybe overclock the machines they already have so that they're producing more hash rate and earning a larger share of those increased transaction fees. And then the miners that are receiving shipments, or maybe even miners in Xinjiang were like now incentivized to move more quickly over to Sichuan or wherever they wanted to move their hash rate for the wet season. Maybe this was the catalyst for them to just move over more quickly. And so like I think we saw that had this same event occurred a couple of years ago, it would have been much, much worse. And that's really encouraging. And I think the trend is even better. Like if we see something like this happen in 2 years, I would be even less worried about it than I was at this time. But like overall, it wasn't really concerning long term, just because we knew the hash rate is going to come back online, and this happened for external reasons, and it was just like kind of interesting to observe, but not a super serious risk.
Thank you for your answer. Next question I would like to ask is, how far are we with the Bitcoin proposals, Taproot and Schnorr signatures? And what types of new development will be allowed due to Taproot? And what will be the role of miners in activation of these proposals?
Right. So last week, I think, maybe 2 weeks ago, there was the code for a Taproot activation was merged into Bitcoin Core, and it's called Speedy Trial. And basically, the idea is because Taproot seems like a pretty much unanimous good thing, like there's not a lot of controversy about whether or not it's good for the ecosystem. The idea of Speedy Trial is that like basically if it works, then we can actually activate Taproot like later this year, maybe in November or December of this year. which would be about the earliest that it's possible to do it. And then in the event that it doesn't work, we can fall back to a more timely activation process, or maybe even do another user-activated soft fork. But hopefully that's not necessary, because there's really widespread support for Taproot. So hopefully we just see the speedy trial activation route works, and it's activated in I don't 6 or 7 months from now. That would be the best case scenario. In the event that it gets activated, basically what it does is it enables Bitcoin smart contracts to appear as regular transactions. So by smart contracts, I mean like Bitcoin has a really simple scripting language that you can do simple smart contracts like multi-signature wallets, where you send Bitcoin to an address, and then in that transaction, it's coded that like you can only spend this UTXO in the future if you have it signed by 2 out of 3 wallets. So in the current implementations with the current signature scheme, that transaction appears differently on the blockchain than a regular transaction where you're just sending Bitcoin from one address to another, but there's no multi-sig, for example, involved. With Taproot activated, it would make it so that those two different types of transactions would appear on the blockchain as just the same thing, a very simple transaction. And then in addition to that, or with that, is that the amount of space that it takes up on the blockchain, like the weight of that transaction, is also going to be the same as a ordinary looking transaction, because you don't need to include all of the conditions for like the smart contract conditions in the transaction. That means that it's going to take up less bytes, and that means that you can fit more of these complicated transactions into a single block. And basically, you can increase the economic utility of the Bitcoin blockchain by like having more condensed like functionality in these simple transactions because of Schnorr signatures and Taproot. So yeah, it's really exciting, and hopefully it's activated within the next within this year.
Thank you for your answer. And the last question from you is: can you describe shortly Stratum v2, and how can it fix mined empty blocks impulse?
Yes. So Stratum v2 is a mining protocol that we worked on at Braiins along with Matt Corallo, the Bitcoin core developer that works at Square Crypto. And high level, what it does basically is it restructures the communication between miners and pools, and it makes it more efficient, more secure, and more flexible. So basically, the amount of data being transferred between miners and pools becomes smaller. So that's good for like bandwidth limitations with these miners that are in remote locations. It helps them save on their data bills as well. It helps the pool save on data bills and on validation of the proof of work. So it's just like an efficiency boost on both sides for the pool and the miner. The security is that it encrypts the data transfers between the two, so there's privacy for like the miner does not have to worry anymore about, for example, their internet service provider being able to look at the data that they're transferring to their pool, and whether that be they want to just look at it so that they can report to their national government that this person is mining Bitcoin. Or if maybe they're even more malicious and they're clever and they decide like, oh, well, we can just intercept some of this and like change a couple of things, and then we can actually take credit for the work, and the miner won't even know about it because we're intercepting it after they've already sent the data. So that's called man-in-the-middle attack. And basically, with the current protocol for mining pools and miners to communicate, it's possible to do that attack without even being detected, and Stratum v2 fixes that. For the empty block problem, basically right now, it's still somewhat common, like maybe you see it a couple of times a week, that a block will be mined with no transactions. And people think that that's like some malicious attack that miners are doing, or like they're just being it's called selfish mining back in the day, because when transaction fees were an insignificant part of the overall mining revenue, it was fairly common for miners to just ignore transactions and mine empty blocks because it's just easier and lower data load, and they don't have to, like, they're not losing out on much revenue. Nowadays, that's not common at all because transaction fees are a significant part of revenue. So the reason that it still happens is that um, the process of trying to find a new block starts immediately once you receive the prev hash from the previous block, the hash in the block header. So as soon as you receive that, you start mining on the next block, because any other work that you're doing on the previous block is now wasted, because that block is already found. So in order to start as quickly as possible, miners initially start mining on empty blocks. And then the pool constructs a block full of transactions and sends it to the miners right afterwards so that they can start working on it. But in between, there's 1 or 2 seconds where the miners don't even have a block full of transactions. And then there's going to be another maybe 30 seconds to a minute where they can continue mining on the empty block even after they've received the full block. And during those times, occasionally a block is found ahead of schedule and it will be empty. What Stratum V2 does is it separates the two messages that miners need to receive to start working on a new block. One is the prev hash of the previous block, and then the other is like the rest of the block that the miners need to start hashing and trying to find the solution to the next round. So those two things are together right now, which means that the mining pool has to send a full block to the miners for them to start hashing. And by separating those two components, the mining pool can send a block full of transactions to the miners ahead of time before even the previous block is found. And that way the miners have it ready to go. And as soon as the previous block is found, all the mining pool has to do is send the prev hash of that block, which is a millisecond, less than a millisecond data transfer. So it basically allows the miner to start working on a full block right away, instead of having that 1 to 2 second gap where they receive an empty block, and then the 30-second to 1 minute gap where they might still be working on the empty block.
Thank you for your answers. I will pass mic to Mikita.
Yeah, thank you. My questions will cover the topics of merge mining, mining pools, and I also wanted to ask you about two recently popular cryptocurrencies, Chia and Helium, but I'm really not sure that we will get to this topic.
Okay.
So I will give just a brief introduction.
Okay, maybe just left the questions for maybe 5 minutes, last 5 minutes, and then we will end the class. Thank you.
So merge mining, as I know, is a technology where a miner can use his computing power to mine multiple cryptocurrencies at the same time, and he will not need to increase his computing power.
Right.
I also know that important point there is that both cryptocurrencies must use the same hashing algorithm. So do you think this technology is prospective, and how the RSK merge mining technology works?
I'm actually not super familiar with how it works technically, but basically all I know is that we include in the op return of our the blocks that we're mining on the Bitcoin blockchain, we include some op return data for merge mining RSK and other coins. I think in the case of RSK, when it's like actually something being built on top of Bitcoin, it makes perfect sense, and there's no downside really to doing it other than the extra technical work of like supporting it and maintaining it from the mining pool perspective. Like we have to do some extra work in order to merge mine RSK, but as long as we're earning enough rewards from that to like at least cover the costs of doing it, then it makes sense. There's also merge mining with like altcoins that are completely unrelated to Bitcoin, and like mining pools do it, us included, but it's purely like just to boost revenue. And we're not like really participating with those altcoin communities. We're not following what they're doing. If they were to change something in their implementation, we might not even know about it, and then we'll stop merge mining them just because like we couldn't follow it. So I think it makes sense in the case that it's like built on top of the actual chain that it's being merge mined with.
Okay, thank you. And do you think this technology of merge mining will help the problem of efficiency in the mining process?
If you mean like in terms of bringing more economic value to the chain,
yes,
without
and
having the scale to
less computing power and so on.
Right. Yeah. Exactly. Like if we could see a whole lot of extra financial applications built on top of Bitcoin with the side chains that are merge mined, then yeah, it's just like it's added utility, added usefulness for the network without any extra cost for the energy to mine it. So and it also increases the like overall transaction fees for the miners, so it makes mining more profitable as well. So yeah, it's definitely an exciting possibility. We see like very little actual activity going on the side chains right now, but that's similar to the like DeFi in general and just these other applications. They're still very new, so it doesn't mean that we won't see a lot more in the future, and I hope we will, particularly with like RSK and those types of projects.
So I will skip the next question and jump to the topic of cryptocurrencies. So have you heard of cryptocurrency Chia?
Chia, like CHIA?
Yes.
I don't know anything about it. I might have heard of it, but I don't know anything about it.
Oh, okay. So it's like cryptocurrencies that will use the power of hard drives like SSD or HDD disks to mine these coins. And I wanted to ask you, do you think this technology can be useful now? Because ASIC miners are really expensive and they use quite a lot of energy.
Right. Generally, I don't believe in like ASIC resistance. I don't believe in like Monero, for example, is a project that tries to have ASIC resistance. And there was a point in time where they just had to change the mining algorithm like once every three or 6 months. And the issue there is that whoever is in charge of changing the algorithm can like produce a more efficient miner than somebody who doesn't know what the changes are going to be. Not that that's going to happen, but just that there's the possibility for that to happen. And then also, I don't think that it's really scalable to the size that it would need to be for like something like Bitcoin. But maybe for much smaller niche applications, it could make a lot more sense just because the amount of security that's needed for those smaller applications is a lot less. So yeah, I think it depends on what exactly the coin is for and like how much security it needs. But in general, I think like ASICs are a good thing for network security, and I don't think the energy consumption is like unjustified. I think it's worth it for the value that we get from it.
Yeah, okay, thank you. Because I just heard that many analysts think that there could be shortage in SSD and HDD drives because of this Chia coin.
It's what happened with GPUs as well, and that's why I think NVIDIA or some company made like a crypto mining specific GPU just because miners kept on buying GPUs, and then like gamers and other people that use GPUs were like they're getting the supply and demand is getting all screwed up for them, and they have to pay way more. So yeah, if there's enough profit to be made from like the SSDs, then increases the demand for them, and then could screw up the supply chain a little bit. Yeah, I could see it happening.
Yeah, so thank you. I will skip my next questions. So we also wanted to see the questions of our students, and I will pass the word to Vasily.
Yeah, we have only 4 questions, and I think for one of that we have already answered. So Christina is asking you, do you see any perspective field for NFTs usage?
I am unfortunately very uneducated about NFTs, other than I have like a lot of friends that keep telling me that they're really cool because you can program in like royalties and stuff like that. Uh, all I feel confident in saying is that they became overhyped recently and like really overvalued. I don't think that like selling tweets for thousands or hundreds of thousands or millions of dollars makes sense in any way. But potentially for like digital artists, musicians, people that are selling like digital native products, then like I could see it making sense, but I don't really know enough to know like what a good future for it might look like. All I know is that the artists that I know that are like into crypto are saying like this is really cool for us. So I believe them. Like it probably does have a future, but I haven't looked into it enough to really understand a lot.
Okay, thank you. And the next question is, if we buy newly minted Bitcoin directly from miners, I thought it might be more expensive than the one in exchange. Is that true or not at all?
Yeah, that's a very common misconception. It may even be such a big misconception that it's true, but it shouldn't be. Like there may be some people who will pay more for those newly mined coins just because like they've heard that they're more valuable. But in reality, it's the thing about the newly mined coins is that any block that contains transactions, the Coinbase payout from that block includes the block subsidy, which is the 6.25 BTC, and the transaction fees, and they're indistinguishable from each other. So if you want like the whole idea of clean coins that have no history, well, technically like part of that Coinbase payout is made up of transaction fees from wallets that have histories, some of which may be like having been used in criminal activity. So it doesn't really make sense from that perspective. And then like maybe it's useful in like people just want to have it for like for the sake of being able to say they have like clean coins straight from the Coinbase, but I don't really think that there's a significant market premium for it.
Yeah, thank you for answer. And the last question is, have you heard about Todex situation and what is your opinion on it?
Sorry, which situation?
Todex situation. I think it is something that happened in Turkey. Maybe I read it, but I don't know really.
The CEO of the exchange that had the
yeah maybe.
Yeah, I heard just like surface level stuff that there was like some exchange that was potentially participating in like fraudulent activity, and then the exchange CEO and a couple other executives like fled the country. I think they've been detained now, and the exchange has completely halted. That type of stuff is it just sucks that it happens because it gives cryptocurrencies a bad name for everybody who's like who sees that going on. And I think there was also the ban in Turkey on using cryptocurrencies for payments like 1 week before all of this happened. So it'll just be interesting because like Nigeria banned Bitcoin like a month or two ago, and then we saw peer-to-peer volume in Nigeria went through the roof, and then there's like a premium on Bitcoin in Nigeria because the demand is higher and you can only get it on the black market now. So if Turkey does follow that same type of path and they try to like restrict access to cryptocurrencies more and more, given that their currency is pretty inflationary, I would expect the same type of thing to happen where like demand will go up in Turkey and peer-to-peer volume will go up too.
Yeah, thank you very much for answer. And I think that's it. If anybody have questions, raise your hand or just type it in chat. If no questions, thank you very much for. No, yeah, Alexei Ukhavov, yeah, you have your word, Alexei. Ask.
Yeah, hello. Thank you for your time. And my question would be, as there is a market for GPUs, which are now in deficit, and there is a market of ASIC. I'm not sure if I pronounced it correctly, but the main point is, why do miners tend to buy more graphic cards, thus increasing their prices, if ASIC has a higher potential of mining cryptos? So
Right.
why do they make their choice? Yeah.
So the difference there is like different current cryptocurrencies have different mining algorithms, and then like you can't mine certain coins with ASICs, and other coins you can't mine economically with GPUs. The main reason that somebody would choose a GPU instead of an ASIC is probably if they have more expensive electricity or they're like trying to mine at home or something. So for example, if you mine at home with an ASIC, then it's going to be really loud. Like at minimum, it's consuming, the older generation is consuming like 800 watts. But most miners are consuming much more than that. And the fans are spinning very quickly and it produces a ton of sound. So it's just not very convenient to have an ASIC miner in your house, for example. Like people use it for garage heaters, but that's about it. Whereas with GPUs, it's not going to be a huge disturbance if you have like one or two, even just like a handful of GPUs set up and mining in your home. And then even for people who want to be mining Bitcoin, but maybe they don't have access to cheap enough electricity, or they don't want to spend $1,000 on an ASIC or whatever it's going to cost, then what they could do is like mine other cryptocurrencies that are more profitable with a GPU, and then just convert the altcoins that they're mining into Bitcoin right away. And that's a way of like kind of tangentially mining Bitcoin without having the conditions to mine it directly.
Okay, thank you.
So if we don't have other questions, so we just want to thank you one more time for taking time for us. Thank you.
Thank you guys for having me. This was fun.
Yeah, Daniel, thanks a lot. It was really good discussion. In the beginning, we had some issues with internet connection, but then it get much better, and the questions in the end were more in depth, maybe. So overall, it was a good discussion. Thank you.
Glad to hear.
And guys, I hope that we will see next week with our guest Matěj Žák. He is a head of product in Trezor. So we will see what's going on with new implementation in their software Trezor suite. And okay, that's all from me. See you next time. Thank you.
Thanks, everybody. Bye.
Thank you.
Bye.
Goodbye.
Thank you.
Bye.
Bye.